Let's continue this conversation about China with an investor who's joined us before as well. MSA Capital Managing Director Ben Harburg. Ben, good to see you in person.
Good to be with you.
Nonetheless.
Eunice is missing me.
Say again?
Eunice is missing me.
I know. Yeah, usually you are. Usually you're over there, which I like to point out as well. You know, when you hear about the EV market share that is being gained by the likes of these two companies and so many others that are competing more domestically in the Chinese market, what are your thoughts as an investor?
We saw this coming. So we were one of the earliest and largest investors in NIO. We always felt like China had a supply chain superiority, huge government support, an abundant market. We hypothesized that China would be 50% of the global EV market, and it is now. And really, the icing on the cake has been their ability to go global now and build products that are on par or better than their Western competitors at a much lower price point. And they're going to start dominating markets that you wouldn't believe. You
do think that? Well, give me a little more on what you think when you say dominating markets that you wouldn't believe. What does that mean?
An example would be today in the Middle East, or in the GCC, UAE, Saudi Arabia, just 3 years ago, the Chinese automakers were only about 1% of that market. Today, they're 20%. And they're selling cars that are admittedly something that looks like a knockoff of a Range Rover, but it costs a fifth of the price. And even affluent Arabs are buying them rather than the higher priced alternative. And so I think you'll see Western consumers, particularly Europeans, looking at BYD, looking at Li, NIO, as they start to go global, and they are now.
To the extent that you have a view on one side of this trade, is there another side that you could short, for example, some of the automakers in other parts of the world that may suffer as a result, particularly in Europe?
I think so. I mean, it's kind of been a if you can't beat them, join them approach with the Europeans. So some of those, VW, BMW, have set up JVs in China in an effort to build kind of jointly produced automotive cars so that they can compete. But those that are not, the Spaniards and others are starting to fall by the wayside.
Does it not mean that some kind of tariff response from all Western countries is more likely as well? I mean, clearly the U.S. has moved ahead in that regard.
Absolutely, and it's coming, and it's already begun. But the price point for a lot of these cars, for instance, BYD sell their cars in Europe for double the price point in China, even though their costs are the same. So there's a lot of fat in that margin still to absorb some tariffs.
Outside of multinational companies, we saw PDD this week give kind of a fresh read on consumer confidence in the region. How are you thinking about exposure to consumers and e-commerce in China right now, given what appears to be headwinds?
No surprise there. I mean, I think that what shocked us was how big the market punished PDD this week. I think it was a little oversold. So clearly, there's high competitive pressure in the market with JD, Ali, Shein, and others. Compression on margins, supply chain constriction, overproduction, and so that led us to believe that there would be some resets. But they've been doing so well for so long that the market, I think, was shocked by that and punished them accordingly.
There's always a question about overall how the Chinese economy is doing, the extent to which they're giving the full picture. Is this one of those moments where you think it's actually quite bad underneath the surface and you've got to watch out for that, or is it going to be all right?
I don't think anyone disputes that it's bad right now. Consumers are scared. They're keeping their money stored up at home. There are $12 trillion of household savings sitting in the dam. I think in the U.S. right now we only have about $900 billion, and that's because real estate prices are collapsing. The public markets have been a disaster. No one wants to go out and put that money into work or even spend, not knowing where their next paycheck comes from. But I think that provides a buying opportunity where when that trust is rebuilt and they start to eke out there's plenty of consumer demand and money to be spent. Man.